Hey guys, Ted the GammaEdge here coming at you with a market recap from May 16th, 2025. The day can be capitalized or characterized rather as, kind of early morning weakness that was bought up and then, eventually kind of a trend day higher. Was able to capture the move today from here to here, so we will get into that. But first, let's review our pre-market prep, understanding kind of the character of the market coming into the session, the key levels we were focused on, and then ultimately kind of how the day played out through the context of our tools. All right, starting off with the market trend model, coming into the session on Friday, we had, bullish fundamentals in terms of trend and momentum from a short and long-term perspective. The encouraging thing that we saw on Thursday was a linear day higher, cumulative tick trending higher, rovo tracks trending higher. We saw buying take place, large significant buying through the filter tick model on Thursday as well. So this was all constructive to see. This kind of laid the groundwork heading into Friday with our bias being sideways to higher. From there, we then look at the SPX options market to then either kind of confirm or deny what the trend momentum in the market is. By confirm or deny, that means it is positioning, supporting what we are seeing in terms of price action and what's happening in the market trend model. So with that said, here's the SPXA options complex. Why do we analyze the options complex? You may be asking. A, it's forward-looking, so we inherently can understand how speculators are positioned out in time on a forward-looking basis. B, SPX, large, liquid, deep options market. By understanding what's happening in the SPX, we can understand generally how the market is positioned. So again, then SPXA, that's your large kind of institutional players. It's slower moving capital. This is your monthly, this is your quarterly expirations. You have open interest of, roughly 15 million contracts. And right, what we can see here is, above the spot price, we are call dominated. So this is constructive to see. Again, and then just looking at broad strokes, 5,900, this is key level in the complex side that the bulls want to see maintained. Next, moving to SPX, again, 4 million total contracts open on this expiration. This is your shorter term kind of traders. This is where they like to speculate. Reason being is this is your 0DT, this is your daily, this is your weekly. So, quicker turning over. This is where we like to focus a lot of our attention because, again, from a trader's point of view, this is where a lot of the speculation is transacting. And then again, much like the SPXA complex, we are seeing confluence in terms of call speculators dominating above and below spot price. In terms of, the key transition level, looking at this complex, I would mark it as 59.05 to 50, sorry, 59, yeah, 05 to 59.10. Then understanding we have some key nodes above and below that. So again, really want to see this range hold from a kind of bullish call speculation point of view. But nonetheless, we have the market trend model trending higher. We have the SPXA and SPXP full complex is also call dominated. So we're seeing confluence through those key data points that we review on a daily basis, right? And so from a swing trading point of view, that is very constructive to be looking for long opportunities. And then, right, going into specific to SPX 0 DTE structure, the structure was pretty clean, right? By this, what I mean is, first off, the structure is call dominated, good to see. Second, the DEX transition zone, again, based off of Delta, we can see that top of that was 5,900, again, key kind of whole psychological level. We can also see that 59.05 is a key level as well. That was the SPXP full complex key level, so good confluence there. So, to the upside, we really want to see 59.05, 5,900 clear, or if we see some form of pullback, we want to see that level hold. So really, when you think about this between the full complex and the 0DT, that 5,900 to 5,910 is a key range that the bulls want to hold. If we do lose 5,900, then we're in the kind of depths of the DEX transition zone. That really goes down to 15,845. So that's quite a large transition zone. So, we would just expect a lot of choppy price action, and really the volume analysis, intraday volume analysis would be key here because that's going to drive where price is going to go because it's much more susceptible to the actual opening and closing of transactions within the zone rather than say, market maker hedging or, the moneyness of the options. Right, because that's the whole point of the transition zone is those two forces kind of influence is minimalized in this transition zone. And then right above 5,900, we would expect, being in the call dominated environment, generally sideways to higher price action. But again, seeing that the confluence of the market trend model trending higher intraday volume analysis showing put speculator transacting higher and higher and higher in the complex is exactly what we want to see there as well. Then we can see that there's a bit of an air pocket between 5,900 and 5,935. So again, we marked 59.35 as the top of the our drunken sailor range. Simply put, what that means is, again, because of this air pocket, intraday volume dynamics is going to be very important to at least take us up to this level and then pushing us through this level if we want to see an expansion higher above 59.35. We really need to do that intraday volume analysis in our market trend model supporting that. So going to the chart, obviously this is Friday, price action has already happened, but a couple of key levels that we had marked was, again, first 59.35 was right here. Our key zone 59.10 to 5900, I had 5900 marked out here, but again 59.10, 5900 was that key zone as well. And so we opened right at 59.30, and this blue line is simply just the opening print. You know, what we've been noticing for, well, it's something I've always noticed, like the opening print is always a key level of reference on my chart, and especially, you know, the last couple of weeks, prices tend to oscillate around this level. It's been a very good level of reference for us. So, you know, coming in today, we had a fairly bullish bias. The reason being is, again, all of our market trend models, all of our transition zones, price was indicated to be above that level. So right then, again, on an intraday basis, we want to be above all those levels and above the opening print. That is all constructive to a, you know, a continuation move higher up to our upper targets. And so again, right, you know, we failed early in the session a couple of times to break through the opening print. We then sold off kind of into that 59.10, 5900 region. Why did we hold this region down here exactly? No one will ever know. However, again, from our pre-market prep, we knew that this was a key level to hold, meaning if we wanted to see continuation higher than the bulls needed to defend this level, of which they did. But me personally, like, I'm still not looking to get long this market until we get above the opening print. Again, our caveat, that is just what I do. That's not a GammaEdge thing. Right? Our whole purpose of GammaEdge is A, to keep you on the right side of the trend, and B, to highlight to you where the key kind of transition levels and upside and downside targets are. From there, you ultimately need to have a system for you to execute on that information. And again, I'm just showing you how I go about doing that. And so again, right, as we were, you know, able to reclaim VWAP, we came right back up to the opening print again. This was 1, 2, 3. You know, this was like the fourth opportunity to move higher. As we started pushing higher, like, that was great risk to reward, right? Because my stop, I placed it, you know, just below VWAP, which was trending higher at that day. So it was like a 5-point stop at this point, which was, you know, roughly we were at 59.30, and the target was up at 59.50. This was a key liquidity level up here. Additionally, from our pre-market dashboard, we could see that in the beginning, this was kind of at the upper end of our gamma distribution. We can see that there's a ton of net OI up there too. So again, that's going to take a significant amount of volume for us to push above that level. But again, this often marks a good kind of intraday target. And so, yeah, right. Like, at the time I put on the trade, yes, could we have made a move higher than 59.50? Yes, absolutely. But, you know, from my point of view, I wanted my entry. I want to know where my stop losses. I want to know where my upside target is. And from there, I understand if the trade has good risk to reward or not. So, right, then we ended up trading up to that level, took profits, and then we got, you know, a little bit of push higher than that. But something that we also want to understand, that I was intently focused on during this trade too, is not only the levels, but what are people actually transacting throughout the day, and is that supportive of the price action moving higher, supportive of it moving lower, supportive of more choppy price action. And so, right, the first thing that we want to do is first look at the market trend model. Again, just the simple way of understanding where the trend of momentum on an intraday and multi-day and multi-week basis is. But, you know, from a 0-DT point of view, I was just focused more on the intraday action. We can see clearly that this was a linear day higher, meaning there's just persistent buying occurring under the hood of the market all throughout the session. And then additionally, kind of right when we put that trade on, we started to see that the filtered tick buying was really picking up as well. And just as a reminder, that is large, significant buying is how this triggers up or down. So, right, this gave me confidence that when I entered my position, A, I had a really good entry in terms of where my risk was well defined, and then B, I had the momentum of the market on my side from an intraday point of view, because buying was going into the market. And then lastly, the last two I want to hit on, which is one of the most important tools that we focus on intraday basis, is this is our intraday volume analysis that we do. Keep in mind, this is specific to SPX 0DT options. Simply put, what we do is, we analyze the distribution of call and put volume on a 5-minute basis throughout the session. We understand if that, with the center of the mass, or what we call a centroid, right? Because every 5 minutes we aggregate all call and put volume. We find the middle point, which is that centroid. Then we plot that on this chart. And over the course of the market, or the market day, we plot those centroids, we connect the lines, and that helps us understand the sentiment of the transactions for call and put speculators. And is that sentiment shifting higher? Is it shifting lower? Or is it shifting sideways in terms of chop? And so by understanding what the behavior the speculators are doing, we can understand two things. One being the character of price action. Is it trending higher, trending lower, trending chop, which I just hit on? Then we can also understand, based off of what has happened from the market open to a specific point in time, we can project out where those centroids are likely to go through the session close. And obviously, as we get more data points, that range or the distribution of probable outcomes, that'll tighten up or it will shift as we get those data points. And right, just a rule of thumb that we have is price goes to where the centroids are going. So like if volume is not transacting somewhere, we should not expect volume to be going to that point. And so you can understand how this is important because on an intraday basis, if you're an intraday, kind of trend trader, you can understand if that trend is there, or if you're kind of an option seller, you can understand where the market is headed, but also more importantly, where the market is not headed. And so, right, all of that is important in kind of formulating what your intraday trades could be. And then you layer on those key levels of reference that we talked about as well. And so, right, put the trade on around noon, which was in this spot right here. A couple of things to note that we could see. And I'll go back and show you how this looks kind of on an intraday basis so you can understand how it's actionable, because I understand we're looking at the end of the day screenshot, but this is also still very important, is just so you can see at one time how the action actually played out. But right here, the trade was taken right there on that breakout, so to speak. One thing to note is the put side was trending higher all session. So that's good because, we know right now there's really not a risk of like a material downside move because the put speculators are not speculating lower, right? The speculation was higher all session, which is suggestive from our point of view that those puts were most likely being closed as opposed to open. And then secondly, from opening right here, granted, why the call speculators wasn't like, significantly ramping higher, is more or less moving sideways to higher. And there was also room from the entry up to, 59.40, 59.50. So this at least was telling us that while, we may not get a massive ramp higher, there is still room to the upside to where this trade could run a little bit. And right, running a little bit is relative to the day and kind of the amount of volatility in the market and the expected ranges. So, running a little bit on this day, it was more like 10 to 15 points versus other days, it could have been, 30 to 40 points. So again, it always comes down to what is your risk to reward on that trade and kind of properly setting your expectations. And this chart helps us set our expectations because we can see kind of where the upper and lower rails of that of those kind of price speculation is occurring. And so, right, as we meandered our way up to 59.40, 59.50, we really just didn't see a lack of call speculation continuing to support a move higher, kind of put a lid on the market. So that is kind of where, from an option seller's point of view, once we kind of get to the extended kind of the upper part of the range, remember 59.50 from our web app dashboard was a key level as well. And then, right, just looking at volume was not really materially moving higher above that. That's kind of a good opportunity if you want to sell something in that range. Again, understanding this is hindsight, but like this is how you learn, this is how you get better, this is how you start to see kind of pattern recognition intraday. And so, right, just going back in time to show you what this tool looks like on an intraday basis. Like here we are at 11:45. So again, we have data points from the open to 11:45, both from the call side and the put side. From the call side, we can see that this is, fairly kind of sideways to lower, vice versa for the put side. This is sideways to higher. And so it's kind of creating just this classic kind of choppy price action. And, that really just marries this choppy price action that we saw through that point in time. So again, from here, my thought process is kind of understanding what the overall environment is, right? It's still bullish, but if I'm wanting to take a trade higher, my expectations of a massive ramp higher really need to be tailored or tampered back, so to speak, because we're just not seeing that acceleration higher on the call side at that point in time. Then, right, as we progress throughout the day, here is at 12:30, we started to see a little bit of ramp in the call speculation side. The put speculation is still continuing higher. Price action itself is still continuing higher. However, this really isn't like the signature that we want to see when we expect, a continued trending day higher. Although keep in mind that the market trend model at this point of view was trending higher. And so again, expectations of a massively higher move are still capped at this point in time. We're still at the top of the drumbeat, so they're into 59.35, so we still need to see an acceleration past this level. And that really comes in the form of call speculation continuing to ramp higher. And then, right, fast forwarding to 2:15, we did get a little bit ramp higher, but then that quickly, subsided. Again, generally flat price action from the call side point of view. So kind of puts a lid kind of on further upside speculation at this point in time. And you can see that, price action or our centroid really was suggesting that from this point in time really weren't going to expect any kind of massive move higher, which we didn't get. Then the last thing that we like to do is we stitch together this GIF from all of our 5-minute slices throughout the session, just so we can kind of understand what's happening. You can really see just that choppy price action that developed most of the day. Yes, we got a little bit of a ramp higher, but again, just understanding that we just didn't get a sustained move higher on the call side, put a lid on the market, and then, was just fairly choppy price action around that 59.50 level once we got there. And with that, appreciate the time, right? Market trend model is still constructive higher. SPX-A, SPX-P full complexes are still call dominated as well. So long as the market remains constructive in terms of call speculators, holding their position or increasing their position, we will remain constructive on the market as well. And obviously, as we get the overnight over weekend updates to our key levels, we will assess those come Monday pre-market and then update our bias and key levels as needed. So with that, appreciate your time. You guys enjoy the rest of your weekend, and we will see you tomorrow on Monday. Thanks. Bye.